Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning, good afternoon, and welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. And on Develop Your Edge, we like to look at different aspects of the market that can help you become a better trader. This week is no different. We have a very interesting topic today. And before we get into that, I do want to welcome Anthony to his own show. Welcome, Anthony. How you doing?
Tom, everybody, great to be here. I know we're always talking about equities, Tom. We're talking about rates. We talk about energy every now and then. Even we splash in some metals. We don't talk about Forex into futures a lot, and we're seeing a big surge of Forex traders come into futures. So we wanted to, talk about the benefits of futures markets and give everybody an idea of what they'll be looking at if they're interested in coming from the Forex side into the futures side.
Yeah, that's great. It is something we don't talk about it enough, I think, but there's only so much time you have every week that we talk. I started in foreign exchange, supporting foreign exchange for Reuters. I was dealing with FX traders over their networks. This is kind of on the early times of electronic trading, and such a different world. Over-the-counter FX trading. It's really interesting how the markets worked, because as a dealer or as a trader, you would call up a counterparty and you try to get a quote, and that counterparty could quote different quotes to other counterparties depending on their relationship, the size of the order. So it seemed to me always interesting, because here we are, it's the mid-90s, the electronic age. Why aren't we doing something better? And I think futures came along and kind of took those flaws and improved upon them, and it's just a better place to trade FX.
No doubt. And I think before we even get into the differences, I would love for you, because you come from that background. I actually have a story that I'm going to share about the euro when we get going here. But because of your background, I think you explain to everybody what really is the difference between Forex, like the major difference, and a future.
Okay, so that's a great question. So Forex is the most of the transactions happen what's called the spot market, which is where a trader would decide that he needs to get a position in another currency. And let's say we're going to keep this US dollar centric, but it could be any currency pair. And the currency pair is basically what currencies are being exchanged. That's foreign exchange. I take one set of currency and I exchange it for another. So we might think of this as buying something, right, when we're talking about US dollars. But what would happen is, as a trader, I would say, you know what, I want to buy $15 million worth, or $10 million worth, or $1 million worth of a certain currency. So I'd call up my counterparty and I'd say, what's your quote for that currency? And it's assumed it's dollar base unless I specify the currency pair. And so if I said, you know what, I want to buy some euro, maybe I'm representing a client that has exposure in somewhere in Europe, maybe Germany, maybe France, etc. And that client needs to pay their workers or purchase items in euro, because they're buying stuff or paying workers in Europe. And so they would say, okay, I want to buy this. But they don't say, I want to buy this. They say, I want your quote. So the counterparty would say, you know what, I'm buying it here and I'm selling it up here. Because if you say I want to buy, that gives the counterparty, oh, well, you want to buy? I'm going to raise my price a little bit because I know that you need to buy this. I don't tip my hand, but what happens is, okay, you know what? I don't like the quote. I go to another counterparty, and this could take a little bit, right? And this is, there were tools to make it easier, so I could send out a message to 5 counterparties at once or whatever it is. But the size is the thing, right? It's 1 million, it's 5 million, it's 2 million, it's a big market, right? And so what would happen is if we agree to a deal, let's say I called up Anthony and I said, Anthony, I want to buy $1 million worth of euro, and you give me a quote and we do the deal, that deal isn't settled till, well, when I was supporting it was 2 days. It was called T+2. So transaction date +2, and that +2 could go over the weekend. So today on Thursday, our settlement date, the funds wouldn't clear the banks till Monday because of that T+2 transaction settlement date. So it's a very interesting I say archaic because it was 30 years ago almost I was doing this. But even now, something like that, I think they've lessened it to T+1. But still, once you're committed, now those funds are tied up until you settle a day later or 2 days later or what it is. And that's a little bit, we're not used to that in the futures market, right, Anthony? We're used to like, boom, we're done, right? We buy something right now. Okay, we've got a position, but we can get out of that position 30 seconds later if we want.
Exactly. Hearing you talk about that makes me think of that Gordon Gekko line when he's like, "Money never sleeps, pal. Just made 800,000 in Hong Kong gold. Wired it to you. Play with it now." One of the best lines. If you don't know that line, it's just him on the beach. Michael Douglas is. I still think it's the best trading movie ever. But yeah, I mean, and you think about it from that perspective about what goes on in the Forex market, and maybe we share our screen here, and the futures market is where the traders, I've always said, if you're trading Forex, you should always be looking at futures. I mean, there's a lot of benefits, and we highlighted some of them here. I think one of the main things that we're going to talk about, I think that a lot of traders are going to really find an advantage when you come over to the futures market, is that central order book. I think that fair level playing field is a massive difference when you look at that. You got that transparent pricing. You've got the depth of market. And I don't trade all these different other markets, but I can tell you this: when I come into the euro, we've also got the micros. I mean, it's there for as much as you want to do. And the bid ask spread is not manipulated, which I think if you're a day trader, when you're looking at the Forex markets and then you're coming to the futures markets, I mean, just those 3, 4, or 5 things that I just mentioned are absolutely at the top of any list of what a trader should want. You're at the big boy table, I think, as well, because you're where a lot of people are going to be hedging that risk and actually taking physical delivery of commodities, of currencies. And so, to me, that's where you want to play. That's where you want to trade.
Well, and Anthony, one thing I didn't mention was there is not one network for over-the-counter spot trading of FX, right? There are different networks.
Exactly.
So having one central order book, one place, anybody looks at the CME Euro FX quote, it's the same for everybody participating.
For everyone.
Doesn't matter if you're, me sitting here in Long Island, or you're sitting downtown Manhattan, midtown Manhattan on a trading desk at Goldman or Merrill or whatever, we're seeing the same prices.
Absolutely. And I think with the introduction of micros across the board, it allows the traders that are trading on the smaller side be able to come into the futures markets and better manage risk, as we've always talked about. So I said in the beginning, I had a story about the euro, and I traded the euro currency on day one that it opened up at CME Group on the electronic side. I'll never forget it. I was sitting up on my desk at Spike. I don't know exactly the year. It was probably
99.
I was going to say 99 because that's when Spike 2, if you've been around a while or if you came from the trading floor, you know what that is. So Spike 2 was really the first electronic area off the trading floor that was created with all the flat screens. And I remember it was crazy. I mean, just the thousands of dollars per screen. Now you get them for a couple $100 maybe. And I traded it on day one, and I'll never forget. I actually went into the pit and I traded the ARB. And that the ARB, if you don't know what that is, I was trading it physically in the pit, and I'd be on a headset with somebody who was actually on the screen trading the euro. So I've been a participant of the euro on the screen for a long period of time, and I'm going to talk a little bit today. I think maybe we go to the charts and we take a look at ways that I trade it. And
Anthony, can I interrupt real quick?
Sure.
So that first day of euro trading, if you had a problem with Globex, you were talking to me, because
Really?
I remember there's a big deal. It was a big deal for the kickoff, right? I mean, it was a big deal when the euro was introduced, right? So all those other currencies, the Deutschmark, the French franc, all of these currencies went away. And there might have been
Yeah.
a time that there was an overlap, but it was all hands on deck for supporting it. So it was midnight whenever it was. Maybe it was midnight that they started. We were there all morning into the next day, supporting the trading for that in Globex.
That's wild. And I can't even where did we open? Did we open up exactly at par? I'm trying to remember exactly where we opened up. Was it right
It
100?
was, but I think it
One
was in Euro's favor, like right away. Like
right away. It was.
sure.
Yeah. I remember it was
Ooh,
pretty liquid for that time.
yeah,
It was pretty liquid.
right.
Because let's face it, I mean, even minis were relatively new 2 years in, right? I mean, there wasn't a lot of electronic trading in terms of CME products at that time. And so, but that product was trading pretty liquid. It just shows the depths of the currency markets, and it shows today. I put up also some of the benefits when we look at these products today. Understand, like I said, you're going to look at your margins and what you're going to be trading and what you can afford to trade. And I think it's extremely important when you're coming into any new product, even if you're an advanced Forex trader, you want to come in and understand the difference with the futures, because futures by nature are already a leveraged product, right? So you've got $1.25 for the micros per tick, and you've got $12.50 per tick for the big euro currency. Actually, the euro currency was cut in half now, so it's whatever. But when you look at it on a tick value, that's what you're looking at. And so to know that there's micros and also the big contract. And, when I look at technicals, I think some of you too that are probably tuning in, when you look at, I think it's actually a good time to look at what's happening in the euro, because I think if it's how it's moving with gold in the past, this used to really be a trade I looked at a lot. I actually used to trade the euro on data points for years. Not as much anymore. But when you have an interest rate environment like we have right now, and you have a gold environment that you have right now, I think pulling the euro up is also extremely important, because this is the opposite the dollar, right, Tom? Right? I mean, if the dollar is going down or up, you're going to look at the euro and it's going to be moving, opposite to it. And it's got a lot of correlation with gold. It's not ultimately always going to correlate with gold, but there is some correlation there where it will be a leading driver, because gold is also in dollars, right? And so if gold's going up, there could be dollars being sold. And so you have to think about that. I think if you're new to the currency market, is like, if gold is going up, money's going from cash to gold. If euro's going up, it's going from dollars into euros. And so it's removing dollars from the system and putting them into another one. Because remember, at CME Group, these are physically delivered products, whether it's gold or euro. And I'm not 100% exactly how it works on the exchange side, but I believe if you went to settlement, Tommy, correct me if I'm wrong, if you bought the euro, it would turn into a euro. I don't believe for the micros, but I believe for the euro.
Yeah, I know. I think that's true. One of the things that you mentioned about the weakening dollar, the strengthening dollar, I think there is a lot to be said about that correlation between gold. Also, there's correlation between, to that point, the Fed speakers, and then like today we had ECB, Christine
Exactly.
Lagarde speak. You're going to see days where you might have flat markets, and then boom, boom, 2 days in a row. Well, Fed speaks, day later ECB speaks. That could move it big swings either way. But you're right. I think it's definitely related to what the performance of the dollar is, because that is one side of the equation, right? You're trading a future that's relating your dollars into euro currency.
Absolutely. And so let's get a little technical now, because as we're halfway through the show, majority of what I talk about here on Develop Your Edge a lot of times is on the technical side is where we can develop edge, because it's really the best place for a day trader to be able to develop an edge, right? I mean, not everyone in here is going to be macro, and you're not going to be able to really come in and be able to trade these macro moves, because obviously it's just too difficult to manage risk and you have too big of swings, especially when you're in the futures markets. But there always is a backdrop, and that's what Tom's talking about. You got ECB and you've got the Fed right now, and it's like, are we in a QE environment again, or is it QT? And there's a lot to be discussed with that, whether you are in one camp or not. But once again, they're going to be market movers. And what I like to do is I use the same exact way that I determine the market environment in equities and rates as I do for every other market. So it's no different for when you're looking at currencies. And what I like to look at, since we probably got a lot of new currency traders here, this is probably new to you. What I look at is Bollinger Bands, 20-period, 3 standard deviation, and I put my Fibonacci retracement above the highest peak or the lowest peak, depending. Like right now, we're in a trending up market, so I take the highest peak on a daily chart, and then I pin that to the bottom part of that peak, the counter of that peak, right? And so you have this Bollinger Band peaks. And what this represents is when the market was moving higher in the euro, the Bollinger Bands were moving outward and we had range expansion, right? And then when all of a sudden that high was made, we had range contraction and we had mean reversion, as you can see right here at the beginning of this year. The euro has been going down since the first day of the year, coming back up quite a bit lately, but ultimately it's still been in a downtrend for the year. And what I'll do is I'll box out with a Fibonacci retracement looking at 70, 50, and 30%. And this will show me what kind of an environment that we're in. And so anytime that we're going from higher to lower, we're in this area where if the market can get back above, let's call it 109.53, that would put us back in this bullish type look and potentially where the range would start to expand again. If not, we're in this bearish look. We're staying below there, meaning that we're below the 50% point of those two peaks. Some of you probably are using fibs on price action. I like to use it on volatility. And I find this to be, obviously I'm using it in NASDAQ and S&P on a regular basis, but I find this to be extremely useful for currencies because most of you know, if you're coming from the Forex markets, these markets, they'll trend and they'll trend for long periods of time, right? And when they break trends, they'll break trends and they'll stay in that broken trend for a long period of time. And so it's one of those things where I want to really identify the market environment. And the way that I trade the currency markets now is maybe only a handful of times a year. It's very dependent on when that environment changes. And then I look for that trend to change and stay in that trend for a period of time. And so this is a very good tool for me to understand market environment. And right now, what's really interesting here is, as we all know, gold's been going higher, unless you just aren't watching markets, but gold's been going higher, and I'll go to that chart in a second. And you could see that the euro is getting pulled up. I mean, also you have an interesting situation right now where rates have been going down in 10-year. And so anytime rates are going down, a lot of times that'll remove dollars from the system and it'll put them in gold and potentially into euro, right? In a rate increasing environment, you're going to see dollars go up because people want to hold dollars because they want to get interest on them, right? And so it's just the simple things. So when you want to look at it from a macros perspective, you could see why the euro is getting a lift here, right? And so what I'm looking for is above that 109.50 area, which we're actually getting not too far away from. If that starts to happen, look at these Bollinger Bands on a daily as they start to widen, and we could be getting into range expansion. And that would put basically, I would say, the high of the year, which comes in right here at around 110.80-ish, absolutely back into play. And I like to use the simple 5-day moving average. You could even pull it out to a 10-day. I use one or the other. Depends on how tight I want to keep my stop. I like the 5-day anytime you're breaking a trend, because if the trend is reversing back up, a 5-day is a much simpler stop, because and it's a tighter stop, which is what you want if a market's going to really rush in a direction, right? A trend that's been gradually going in one direction, I'll tend to use the 10-day more because that market is trending over a longer period of time. But on reversals, I like 5-day because it keeps its stop tighter. If we start to push up above there, that'll be something to keep an eye on. And I just want to go to the gold chart next. and show you, look at what it looks like on the daily here. If you really just remember what that Euro chart looked like, that Euro chart looked almost identical to gold. And I'll go back to it again. So you could see back, it's the same time frame daily, right? You had a move up, you had a Bollinger Band peak, then you had another move up, a higher Bollinger Band peak. And, you know, I don't have it boxed out. I'll explain why in a second. But look at that. We rolled down and now we rolled back up, holding above the 5-day range expansion, gold's exploding. Let's go back to the Euro. I mean, that pattern looks almost identical, right? The Euro was actually stronger towards the end of last year than gold, and now gold is taking that leadership role. But this is why it's so important to watch it, because if you go back and look, if there's any tell that you want to look at for the Euro, a lot of times it's going to be, is gold moving up and is it moving up quickly? And if it is, a lot of times it can just naturally pull Euro there once again, because it's pulling dollars out of the system and they might go into Euro. And so I think right now from a technical basis, intraday, I'll break it down and I'll start to look at where are we on month in, month out, based on the volume weighted average price on the Euro. And I like to just keep it pinned from the opening of the month. This is the all trading hours session. And you look here, and if you pin it to the beginning of the month, every single test of the VWAP over the last month has been held. And so volume weighted average price, I always say it's a great guide. It's not the end all be all, but when you see that the volume weighted average price is going up, 5 days going up, Bollinger Bands are opening up, that is a very bullish look in the markets right now for the Euro.
So Anthony, real quick, for those of you who are new to this and don't know what the volume weighted average price is, think of it as a representation of every contract traded. What would be the average price? If we took every trade and we figured out what price and how much volume at each price and took an average of everything traded, that's up to date. So that's amazing. I think, you know, we are first week into March, and you have the exact, you know, average of every contract traded since the beginning of the year. It's pretty amazing.
And you look at gold. Now, gold is staying one standard deviation above the volume weighted average price, and that shows you the strength of it. This is why I look at standard deviation bands, because it shows you strength and trend. At the end of the day, if there's anything I could help you with is understanding market environment, right? I'm not going to give you the strategy that's going to take you to the promised land. I mean, that's for you to work out on your own end. But when it comes to market environment, I will tell you this, what I have learned as a trader is find the side that I don't want to be on. That's always going to be more valuable than the side to be on. Why? Because if I'm going against the grain, against the powerful trend, it's going to be too difficult for me to find any strategy to work, and it's going to be too difficult for me to ever be able to manage risk. So therefore, I will then focus more on the side of the path of least resistance. And so when you identify a market environment like we have right now with Euro and gold, it's telling you just stay on the bid. Trying to sell rallies just because a market may be overpriced or overbought, I always say, is the path to the poorhouse. It just doesn't work out that way. It never works good. I mean, yes, it can be done if you're a super short-term scalper and you're trying to scalp against the trend and looking for way blowout moves. But that to me is not really a way to develop an edge in any sort of market. I mean, it's a way to maybe make a few bucks if you don't have anything going on, but even then I wouldn't recommend doing it. Ultimately, you want to find the market environment that has correlation and then proof that that correlation is working, right? So markets that are correlating are gold and Euro. We have proof that they're correlating to some extent. Obviously, gold is outperforming it, but it is working together. And then you put indicators that will confirm or contradict that when you're looking to trade it. And this is why I like VWAPs and Bollinger Bands, because if you see range expansion and then you see holding above Bollinger Bands, then you look to see, okay, well, gold is the upside leader. It's holding above one standard deviation. If it were to get below one standard deviation, we'll see how Euro reacts. Now you have to watch reactions. This is the part of developing your edge as a trader, right? Looking at what's happening in the context and then finding nuance in the situation. One of my mentors taught me that, Ira Harris. He's probably one of the best macro people out there. And so to me, understanding context and nuance is what helps you really narrow in on your strategy. And this, what I'm showing you today, is just market environment. But when you look at your strategy and you look at these markets, it'll help you stay more on the side of the trend versus trying to go against the trend.
So one thing, Anthony, that I've noticed, and I know you don't use these indicators, and that's you know, part of your routine is I wouldn't change it in any way. But one thing that FX traders might be looking at too are pivot points for the intraday levels, where it might explain why there's some resistance, support, just for informational purposes. Pivot points I find really took hold in FX traders when I was working with them on the trading desks in the institutions. And a lot of that has to do with there's not a lot of fundamental data, right? With FX trading. We go back to the ECB and the FOMC and interest rates, the dollar, guiding currencies. But for technicals, I wouldn't change anything Anthony does. But I do see a lot of FX traders looking at pivots. They work the same way as they do on futures that they did in the spot market. So if you're used to using pivots, you can overlay what Anthony's showing you here on the intraday charts and just have another reference point. But I find that pivots for FX traders really resonate. I just want to throw that out there.
I think it's important to know, because in any market that you're looking at, if there is an indicator of sorts that has a higher hit rate just based upon the movement of that market, as a trader coming into that market, you want to be looking at that, because whether you think that that works or doesn't, you have a lot of eyes on it. I go back to, why does someone look at a 50-day moving average?
Right.
Why does somebody look at a 200-day moving average? Well, it's because there's a lot of eyes on it. Do I personally ever make a trade off of a 50-day moving average or off of a 200-day moving average? No, I don't, right? I don't think that there's been a handful of times, maybe even in my long-term portfolio, I've made a decision based upon that. But ultimately, when we get near those areas, as Tom mentioned with pivot points, you look at it and you might find some nuance, right? And I go back to understanding what I try to help everybody with each and every week here. As I always say, I'm never going to give you the best strategy. I'm never going to, make you into the trader that you can be. But what I am going to help you understand is developing that edge, how to last longer, how to become a better trader. And to me, it always comes down to market environment, understanding the context of the situation, watching the market reactions in real time, and being able to become the best executor of any strategy that you choose to put forth in place. And that, to me, is really the difference. That's, in my experience, what separates the traders that just come into this business and end up leaving versus those that make it. Those that make it end up finding, environments that work very well for their strategy, that are conducive to their strategy, and they take advantage of it. And when things aren't working so well, they're able to dial it back and just lose less, be smaller, and be smarter. I mean, that's really, if anyone always asks me, what is the trick? And that is the trick, right? And people will say lose less and win more. Well, who doesn't want to do that? But it's coming into the days and understanding the environments. It's coming into the situations at the beginning of the day through your preparation that allow you to do that and become a better executor of it. And so looking at these different indicators that I'm putting out or that Tom's discussing, they're things that you put into your chart, and it's up to you to find ways to be a better executor of those markets. Tom, I know we're running a little short on time. I just want to show the chart again real quick here. When you look at, if you go to cmetgroup.com and you look at all of the different FX futures, there is a micro version of all of these, and it'll show you all of those here, what their tick values are, and what their ratios are. I know when you are coming from Forex and you're coming into futures, it is a different world. Understand it. So it shows you actually here, so the settlement is physical. And so you have to understand that as well. I didn't know that was the case necessarily for the euro, like we talked about. And so everything you need to know is going to be on cmetgroups.com. And also don't forget that there's a micro gold as well. I think micro gold is a great way, not only for day traders to start getting involved in gold if you want to be able to trade it, but I have used micro gold as long-term swing positions as a way to part of my portfolio to where I'll hold part of gold, because actually this is the gold price versus like buying an ETF on it. You can precisely manage your risk or how much access you want to gold by using the micros. And I'm pretty confident when it comes to micro gold that it is not physically delivered. So I don't think you're going to get a small little bar of gold. I think that this one actually is financially settled. But once again, do your homework. Go to cmagroup.com for more on that.
Well, that's awesome, Anthony. Thanks so much for bringing that up. I thought it was a great discussion today, and look forward next week. I think we're going to have a rerun. Maybe we'll rerun this show. I don't know. But and then you'll join us in back in 2 weeks after your excursion gallivanting about Florida.
Yeah, everybody, I will be at the FIA conference in Boca next week. It's for futures markets. It's, I think, the best conference in the States for futures. And so I will be there next week in Boca. So also working on my tan, even though I do live in Florida, but nonetheless, I will be out there in Boca. If you're out there, hit me up on Twitter at Anthony Crudele. Don't forget to check out my Discord. That's on the link on my Twitter page at anthonycrudele.com. And that's where you'll find me.
Awesome. Thanks so much, Anthony. And thank you, viewers, for watching. We'll be back here at NinjaTrader, 3:15, bars closing. Mike Burke, Mike Burke, Anthony. Mike Burke will be back to wrap up the day. So I hope you can join us. In the meantime, have a great trading day.